If you're a trader, you've probably spent countless hours, maybe even years, hunting for the perfect strategy. That one holy grail system that's going to unlock consistent profits and, take all the emotion out of the game. But what if that endless search isn't the path to success at all? What if it's actually the trap? This quote from a Reddit forum, it kind of cuts right to the heart of what we're talking about today. It sounds almost a little dismissive, right? Like, oh, sure, it's easy. But it points to this fascinating and, let's be honest, often painful truth that a lot of traders take years, sometimes even decades, to figure out. The problem might not be the market or your strategy, but something much, much closer to home. So why are we so obsessed with finding the perfect system? Well, it's because they promise this world of pure logic and process. They offer this really seductive idea that you can totally remove the guesswork, the fear, the greed, and just execute. Just a simple mechanical plan. I mean, just look at how clean this looks. Trading strategies are so often presented like this. A simple, repeatable checklist. A break here, a little mitigation there, another break, and boom, profit. It makes trading seem almost effortless, kind of like assembling IKEA furniture with a perfect set of instructions. And this, right here, is the core promise, isn't it? A purely systematic approach that says it can just erase human error. The whole idea is that if you just follow the steps, your own flawed psychology, your own emotions, they can't get in the way. It's a powerful and really appealing idea. But as we're about to see, it's often just a myth. All right, so now let's pull back the curtain on that clean, systematic dream and take a hard look at the messy reality. We're going to follow the journey of one trader who shared their story on Reddit after spending nearly 2 decades in the markets. This right here is the turning point. After years and years of blaming everything external, the strategy, the market, the broker, you name it, this trader came to this absolutely startling conclusion. The enemy wasn't outside. The problem was staring right back at them in the mirror every single morning. And this was the cost of that lesson. $500,000. And look, that's not just some number on a screen. That's 19 years of small leaks, of blown accounts, of these incredibly destructive periods. It's just the staggering gap between the promise of a simple system and the cold, hard reality of human behavior. This timeline, wow, it really puts it all in perspective. A full decade in, and they were still stuck in that trap, thinking, oh, the next strategy will be the one. It took almost 20 years to finally shift the focus away from the charts and onto themselves. Okay, so if the strategy was never the real problem, then what was? What was causing these repeated cycles of boom and then bust? Well, the answer boils down to one thing: self-sabotage. Does any of this sound a little familiar? These aren't technical errors. These are behavioral patterns. It's that impulsive decision to fix a losing day. It's that trade you take just because you're bored. It's that one emotional afternoon that completely wipes out weeks of careful, disciplined work. This is the real battleground for most traders. And what's crazy is that these personal confessions, they map directly onto these formally recognized behavioral biases. Revenge trading and FOMO, they're not just bad habits. They are well-documented psychological traps that even the most experienced people on the planet fall into. And this is not an isolated case, not by a long shot. This comment from another user, Cosmic Boggs, just powerfully reinforces the point. 35 failed accounts. That's not a strategy problem, that is a pattern. And the realization that you are the variable you need to control is probably the most expensive, but also the most valuable lesson in all of trading. So how do you fix a problem that isn't really about your strategy? Well, the shift isn't about finding a new plan for the market. It's about building a whole new structure for yourself. It's about putting your ego aside and finally letting data guide your behavior. So here's the light bulb moment. The trader had all the tools in the world to analyze the market, but absolutely no system for analyzing themselves. They were treating their own behavior like it was just random noise instead of what it really was, the most important data set they had. We usually think of backtesting like this, as a way to validate a market strategy using past price data. But the real breakthrough comes when you apply that exact same principle to yourself. You have 19 years of data on your own behavior. It's time to actually analyze it. This is the new process. And notice, it's not about finding some new indicator. It's about disciplined self-observation, a proper journal to track not just P&L, but your emotional state. Using behavioral tags to see if you're making decisions based on fear or greed or boredom. This is how you turn self-awareness into an actual system. And this really gets to the core of it. Willpower, it runs out. You can't just decide one morning to be more disciplined and have it stick forever. Real, lasting discipline comes from building a structure around your own weaknesses, a system that makes it harder for you to make those same emotional mistakes over and over again. Now, this idea of building a system to manage human weakness, it isn't just for individual traders. The very same dynamic plays out on a massive, massive scale inside the world's biggest financial institutions. So let's take a look at what happens when the enemy in the mirror is an entire company. Lehman Brothers. Before its collapse in 2008, it was a financial giant. And on paper, it had one of the most sophisticated, data-driven risk management systems the world had ever seen. I mean, they had a strategy, a process, a rule for absolutely everything. I mean, just look at this framework. It's basically the institutional version of a perfect trading system. They had committees, defined risk appetites, limits on every conceivable type of exposure you can imagine. Their stated goal, literally, was to protect the firm from the very thing that ended up destroying it. Where vision gets built. That was their tagline. The irony, of course, is that their vision failed to account for the one variable that mattered most, their own behavior. They had the perfect system on paper, but a system is only as strong as the culture and the discipline of the people who operate it. And when greed and overconfidence override the rules, well, even the strongest fortress is going to crack. And this leaves us with a final, kind of provocative question. We've seen that a strategy is pretty much nothing without personal discipline. But the story of Lehman suggests that even with the most elaborate systems in place, human biases can still lead to catastrophic failure. So, what does that tell us about our ability to truly control risk in a complex world? Definitely something to think about.